So here we go, part three. And in this section, I'm going to talk about materiality and place, specifically geographical location. Now, clearly, people and firms have to exist in a specific place. We haven't got the technology in order to move around and not be in a space or not be located somewhere. But the material world, the digital innovations that have existed through ICTs and current technologies, has been hidden to a degree, to the extent that corporations and individuals can engage in behavior that makes the nature of the space that they exist or the place that they exist, it obfuscates it. It makes it less than transparent. Global corporations, as an example, might have a headquarters, but will have lots of other offices over the world, throughout the world, which enables them to move money around, not illegally, but immaterially, intangibly, because the place of the corporation is not fixed; it's not located. Similarly, banks can create special purpose vehicles that sit off their balance sheets and away from their place, their fixed location. So they're immaterial in that respect. And also people, humans, particularly wealthier ones, are able to adopt a status which is non-dominion, which means that they're not located in a particular space, or they can be located at different times and different places in order to be able to offset their own liabilities for tax, as an example. So in such a way, firms and people have become immaterial. So let's look at the first example, which is offshoring. Now, sure, firms offshore productive capacity all the time, but here we're dealing with them offshoring cash. In that according to Cernicek, in a study done in 2017, is that a lot of the world's major tech companies are effectively offshoring huge amounts of cash. Now, offshoring of productive capacity is clearly offshoring the material. Offshoring cash that's held in different jurisdictions is more immaterial, however, specifically because the said companies won't be liable for the tax that is to be paid on the cash that they're holding in these jurisdictions. That will be down to the law of wherever it's being held. And the majority of the corporations will be holding their taxes in what's known as tax efficient jurisdictions. Apple, as an example, holds its European cash in Ireland, which is tax efficient, or in China, it holds it in one of the special trading zones, where they pay zero amounts of tax. So, and in that way, they've made their cash holdings non-visible, immaterial, and intangible. Apple are a highly financialized organization. Not only are they the leaders in share buybacks, but also have the highest stockpile that is offshored, which is not subject to their tax. But they also have a company that is organized specifically and owned by Apple itself in order to be able to manage Apple's cash. So this firm, Braeburn, are engaged in the activities of investing Apple's cash in jurisdictions that are outside of America in order to be able to invest and therefore consequently increase the size of the cash pile. As you can see from this, is that Apple's offshore cash holdings grew to 252 billion by September 2017. The amount of cash held abroad fell quite a lot in mid-2017 through to mid-2018 as a consequence of President Trump's tax reduction plan, in that it made it safer, cheaper for Apple to repatriate its cash from abroad, bring it back into America and pay a lower corporate tax rate and therefore distribute it to its shareholders. However, the amount that was repatriated was less than 50% of its total cash holdings that's held abroad. So in other words, Apple is still holding a big amount of money abroad because they're making money out of investing their money. You might not have heard of this, but there's Mossack Fonseca, which is a lawyer's firm that specialized in offshoring people's tax liabilities. But instead of this being corporate tax, is that here the tax liabilities are those of individuals. Finding the data is quite difficult in order to be able to corroborate the belief that money is being held offshore, but there was a leak, a leak of information from the firm Mossack Fonseca in what's known as the Panama Papers, which gave details of the offshoring of tax liabilities through tax avoidance schemes. Now, tax avoidance schemes are, of course, legal, whereas tax evasion is illegal. However, the difference between avoidances and evasions are time to time difficult to tell. As you can see from this graphic, the amount of money offshore, held offshore or being offshored, is being done by a few significant countries. The size of the balloon or the ball indicates the amount of money that's being held or that's being originated and sent offshore. Now, it doesn't mean to say that it's the citizens of those countries that's doing the offshoring. As an example of that, Hong Kong is extraordinarily proficient at offshoring money held by the world's wealthiest individuals all over the planet, as is the United Kingdom, which has more tax havens than any other sovereign on the planet, as well as a consequence of its withdrawal of empire. So lots of parts of the empire, which are small islands, have been given the right to, instead of levy tax on goods as they were transported through the world as part of the empire, is that they're now levying data and cash flows specifically. And according to Zuckman, in a very comprehensive study that was done in 2015, 8% of all of the world's financial wealth is held offshore, which costs the various tax authorities of those respective countries approximately $200 billion a year. And then, to give you an indication of what this could mean to the actual country itself, is that Europe offshores about $75 billion worth of tax revenue. That's Europe. But in terms of the amount that is lost abroad, if we were to look at the individual countries within Europe, is that the UK is a significant offshorer. So I would hazard a guess to say that about 50% of that 75 billion is the amount of money that is probably payable to the revenue and customs. If you to consider the amount of money that's offshored in, say, Europe, now the UK would be responsible, I think, for approximately 50% of the amount of revenue that's offshored, which would mean that we're talking probably somewhere in the region of about 10% of that annually, which would mean that the UK is losing out of about $3.5 to $4 billion worth of revenue every year, which would comfortably pay the deficits of the NHS. We can see here that the effective rate of tax paid by US businesses has been reduced by 30% since the 1990s. Now, that is as a consequence of two things, I think. One is policymakers effectively reducing the tax rates on the principle that if you tax corporations a lot, then they will leave and they will go to a lower tax jurisdiction. And the other thing is we can't discount the impact of lobbying by US corporates and trade bodies, is that the amounts of money that are paid to lobbyists by corporations is excessive. As an example, the fire sector, which is finance and property, really, the amount that is paid by that sector to lobbyists in order to lobby government is is in excess of $500 million a year. Now, lobbyists and big corporations make contributions directly to politicians. Now, a corporation, a profit-making corporation, will only make a contribution to a politician if it is to receive something in return. They're not going to give money away for some altruistic reason or because they support the policies of a particular individual. Is more likely that corporations would pay money in order to actually elicit some form of return. And we can see from this is that the effective tax rate has declined quite considerably.